All right, today we are talking about credit score secrets with Micaela Gouger from United Credit Advisors. Thanks for coming today.
Absolutely. Happy to be here.
Yeah. So, credit score secrets. People want to know, how do I improve my credit, right? How do I get a higher score? Because I think most people understand the importance of it, and the importance of it being as high as possible. But it's such a black box of how do you get it higher? And so that's what we're going to cover today is, what are the things that you can do to get it higher? So just to get us kind of started, tell us, what are some of the factors that really impact credit scores?
Well, the biggest factor is actually your payment history. That's really the most important number one thing that's looked at. Having on-time payments, and specifically the last 2 years.
Okay.
You really want to have on-time payments, especially for the last 2 years. So if you've had a hiccup and made a mistake previously, really, really hone in on having on-time payments for at least the next 2 years. And from there, you really want to make sure that you're building your credit profile. So not just having a couple credit cards or just a student loan. You want to have a couple different types of accounts.
Okay. So going back to that first piece, um, I forgot what it was.
The
Sorry.
payment history.
Yeah.
That's okay.
The payment history. Oh, so to clarify about, because you're talking about you want to have a positive credit history of on-time payments. And I just want to further clarify for people that what we're talking about is once you are late on your payments, you go 30 days late, 60 days late, 90 days late. Those late payments are being reported to the credit bureaus, and those are hurting your score. Those are bringing the score down, right?
Yes, and they will continue to hurt your score for 7 years.
Ooh.
But like I said, the last 2 years are really scrutinized. That is essentially your recent trending behavior to a lender or someone who's checking your credit.
Yeah.
So we just want to make sure that it's been impeccable for the last 2 years if you want to have higher scores. And the easiest way to do that is set up auto pay for the minimum payment on all of your accounts. That way, if you're traveling or you get sick or injured, it's not something that you have to worry about. At least the minimum payment was made.
Okay, great. So top priority is to make payments on time, and you can do that so easily just by setting up automatic payments.
Correct.
Okay. And then the next thing is having you called it the credit profile. Um, and when I think about that, I think of a little pie chart that I know that I've seen from you, a little
Yes.
pie chart of these different types of credit that you can have. So credit cards, and now credit cards are the installment, or the revolving.
Yes.
So credit cards are the revolving payments, and then other loans like mortgages and car payments are the installment loans, because they always have the same payment every time. And I think, if I remember right, that you want to have like a one-to-one. Like if you had a car payment and a house payment, you would ideally not have more than two credit cards, right?
Exactly.
Okay.
You got it.
So having that ratio helps.
Mhm.
What else with that credit profile? Because there's other things that go into that. So there's the payment history, there's the types of accounts.
Yeah, so having that good variety. And then you also want to make sure that you're using your credit cards. I see this all the time where maybe you get a credit card for a specific purchase. Let's say maybe a Home Depot credit card, and you buy some items to work on your home with, and then you don't really ever use the card ever again. Maybe in a couple years you do.
Yeah, and you had a 0% interest or some deal they were given. Yeah.
Which is great, but you want to keep using that card. It's essentially going to keep building your credit and help your scores increase without plateauing. Also, you run the risk, if you're not using the card, that the creditor could, for some reason, close the account, and that will really hurt the credit scores. So just keep it active, use it here and there, and it'll help build your scores.
That's right. So whether the creditor closes it or if you call and close it, either way, that's always bad for your credit, right?
Yes.
Yeah. This is something I'm always talking with people about as they're getting ready to buy a house. And we think that we're about to do something really smart with our money, like pay down all your credit cards to zero. And it turns out that it's sort of counterintuitive, but it turns out like that's not really the best thing, because what you're saying is use the card. That's
Yeah.
that part of how you get your score higher is by showing that you are a responsible credit user.
And I love that.
Yeah.
Responsible is the key word here.
Yeah.
So using that card, not maxing it out, not carrying super high balances.
Yeah, let's
That's
talk
the
about
key.
that. Yeah, so tell us what is the ideal for balances on credit cards?
So that sweet spot is 10 to 30% of your max limit. That's really where you're going to get the most active points for the card. Like you said, you're being responsible, and the creditors like that. When the balance is at zero or it's not being used,
Or it's maxed.
it's not hurting you at that point. But once it goes over that 30% of the max limit, you're going to start seeing points drop off your scores. And the higher that balance gets, the more points you'll lose. So having really high balances will substantially affect the credit scores negatively. Having no balance just isn't going to help you. So like I said, 10 to 30% is the sweet spot, and you'll see your scores increase.
Yeah, so and just to help, I mean, I'm not the best with math, but I think it is helpful to say, like, if your credit limit, if they give you $1,000, then you would never want to have more than $300. You would never want to put more than $300 on that card, because you never want to be over that 30%, right?
Right. Exactly.
Length of history too, that's another one, right?
Yes, that's another factor. And having longer history is going to help. So that's really why when you close an account, it hurts your credit scores, because your history now is shortening or it's not as long. So you want to keep accounts open as long as you can. That doesn't mean that you don't pay them, right? Obviously, pay it on time, but keeping accounts open as long as possible. And a trick there, if someone doesn't have a lot of history, they can actually be added to an account as an authorized user for a credit card, and that will inherit some positive history for them. That's a great way to increase the scores quickly.
I know that is a great credit secret, especially for parents helping, young adults build credit. They can do so much just by adding the adult kid onto a credit card as an authorized user. And even if the parent has had that credit card since before that kid was born, that entire credit history now transfers to that kid. So that I think that's a cool credit score.
It's great.
Credit score secret.
And it's a quick, score increase or bump, which is great.
So is there anything that people could do, like, in a short term? So let's say that maybe they have like a 695 credit score, but we know if they're trying to buy a house and get a mortgage loan, we know that there's a break at 700 and they can get a better interest rate at 700. So what kinds of things could somebody do to sort of bump up their credit score quickly?
Definitely. So the big one is making sure you have 10 to 30% balances on all your credit cards. So either make a purchase if you don't have balances, or pay them down into that range. That's going to be the biggest part. Being added as an authorized user to a family member or spouse is another great way, just like we said, to inherit history, jump the scores pretty quickly. And then if you don't have a lot of credit or accounts, let's say maybe you just have one credit card, you're trying to build your scores quickly, I would recommend opening another account. Now, that's very limited to open one account at a time. We don't want you opening 5 new accounts at the same time. That would really hurt, not help. But one account to build your profile and make it stronger would actually increase the scores quickly.
Okay, good. What about I've heard that there are safer ways and more risky ways to use credit cards to build your credit. And maybe we've already touched on some of those, like you wouldn't want to open 5 new accounts, but maybe opening one account would be good. Are there any other tips like that you have?
So the big one for keeping it safe is keeping those low balances. The risky part, or I guess the risk comes in when you make a large purchase. So let's say you have an $8,000 credit limit and you buy something for $7,500. Well, you run the risk, if you don't pay that balance down, not only are you going to pay interest, but it's really going to hurt your credit scores. And the other thing is that each company or creditor reports to each bureau on different days and times. So if for some reason that card reports with that $7,500 balance or a high utilization to one of those bureaus, that score is going to be very low that month. Whereas the other two could be higher because you paid it off before they reported. So if you're using your cards a lot, making big purchases, paying them down, and using them frequently, you run the risk of your scores not really being as high as they could be. Whereas if you're just keeping that consistent low balance, your scores are just going to get higher and higher each month.
Okay. All right. There's one other thing too that I was thinking about, which is because so when I'm talking to people, they're in this mode of needing to get a mortgage, right? A mortgage loan. And so their credit score affects the interest rate and all that. And so some people will start to do some things they think are smart with their money before talking to a lender, which I don't recommend. I think you should talk to a lender and a realtor as soon as you're thinking about buying, right?
Definitely.
Get all of the free expert advice up front. Make sure you're not doing anything that is unintentionally stupid or negative or bad.
Yeah.
And I think one of those things is, people who pay stuff off, like pay off old collections accounts, and it makes sense, right? Like, oh, I know I have this old $300 collection thing that's sitting there. I'm about to get a mortgage loan and I want my score to be good. So why don't I just go pay that off? Let me just pay off that $300 from 10 years ago. And that should help, right?
That's the thinking, but in turn, it really hurts. And I see this all the time. People will go and pay off old collections thinking it's going to help their scores. They pay down all their credit cards. Lo and behold, their scores tank.
Ugh.
So we want to make sure that people aren't wasting money or time that they don't need to. When you pay off a collection, it's not going to come off the credit report. It's not going to help your credit scores. It really is only going to update the balance on the account. It will then reset the statute of limitations another 7 years to stay on your credit report. So we don't recommend paying a collection if it's not going to help your scores. And it, in fact, will do the opposite and hurt them.
And, I think this is a good time to ask you to talk a little bit about United Credit Advisors and the programs that you guys offer, because I think that they're affordable. I think they're great for people, especially if people have a goal of getting into a house in some certain time frame. What can people expect if they come to you and want to work with you?
Well, specifically, we work for the home loan industry. That's our niche. So we want to help people get home ready and get back to their realtor, their mortgage lender as fast as possible. But the two parts to our program, first, we're going to work to remove those derogatory items like collections and charge-offs. We want to actually get it deleted without the client having to pay or settle it. That deletion immediately increases their credit scores.
Cool.
So whether it's a late payment, a collection that has been paid, an outstanding balance collection, all the way through repossessions, foreclosures, tax liens, we're very successful at getting every type of negative item deleted and removed.
And what about, so in my mind, I think if I have a negative item on my credit report, but it's accurate, like let's say that I did make a late payment, or I did have a high balance, or whatever the negative thing is, right? If I have something negative on my credit report and it's accurate, I would tend to think that there's nothing you can do about that. We just have to move forward and try to get the next 2 years of positive credit history, right? But I think with your program, that's not actually true, is it?
Right. We can remove any negative item, even if it is legitimately yours, or it was something that was actually late, or it was actually a collection that you had.
So
That's really irrelevant in our process.
Oh, okay.
Yes. So we are actually launching a complex investigation on our client's behalf at the bureau level. And we're asking them to prove that the file or the item is complete and accurate. So there's thousands of things that we'll demand in our investigation, like proof of original signatures or 7 years of payment history, thousands of little things. And if the bureaus can't provide that to us within the federal timeframe under law, which is 30 days, then that negative item has to immediately be deleted and removed, no matter what it is.
Sounds like kind of a cool loophole, huh?
I mean, it is the law. We're upholding it to the highest degree possible. And if the bureaus can't comply, then they have to remove the item, which immediately increases the scores.
See, and that is what I love about you guys so much is that, I think there's a lot of people in the credit industry that are predatory. And I know that United Credit Advisors is really for the consumer. I mean, you guys are really coming in and you're on the consumer's side.
Absolutely.
Yeah. Well, thanks for being here today.
Thanks for having me. This was great, and happy to share any tips or tricks anytime that you need us to share the wealth.
For sure. Yeah. And if you have any questions about your credit or you have negative items that you want to see if you can get deleted, definitely reach out to Micaela Gouger at United Credit Advisors.
Thanks.
If you like this content and want to support the channel, don't forget to hit the like, subscribe, and alert bells before you go.